We had the China cut its interest rate. Everything was poised for gains, but it didn't quite transpire that way.
No, unfortunately it was a pretty negative session for the Australian share market given all those positive leads that you mentioned, James. I mean, last week was a horror for the Australian share market and we were pretty happy to close the books on that one. But the first day of the trading week, and once again we're in the red, down by 0.2%. Fantastic leads coming into the session. Over in the UK, we saw a very strong session on Friday with David Cameron's party winning a majority, so we saw a huge rally in terms of the UK markets, and that was followed by the US, that jobs report. It was just right, not enough to move expectations around a September rate hike. So a just right jobs report where investors were very much cheered on. And then of course on Sunday we saw China cutting its interest rate for the third time in 6 months. So everything was set up for a good day, but unfortunately in terms of the medium to long-term outlook on the Australian market, I think investors and money managers are really just recalibrating their asset portfolios and their asset allocation, and that's because the current yield curve in Australia is suggesting that the 2% record low in terms of interest rates may be the low of this cycle. Now, that's not to say that interest rates will be going up in any hurry, but we'll probably see interest rates on hold for the next couple of years. So we are seeing a re-evaluation of some of those high-yielding stocks. We saw stocks like ANZ down by 1.3%, Telstra also down by 1.9%. And remember, these yield plays have been moving in line with bond prices, and we have seen bond prices falling. So unfortunately, not a good day for those yield plays, but given China's interest rate cut, it was a good day for some of those miners. I think these high yield trades, the reason why it's been so popular is the very low interest rates around the globe. And there are signs that that low interest rate cycle, or the falling interest rate cycle, is coming to an end in large economies like the US, although China's still cutting. And in Australia, it looks like we may be at a standstill for a long time. I don't think we're going to see a massive decline all at once in the banks as well as Telstra, but the reasoning behind these trades are coming to an end. You'll still see income investors very much attracted to these stocks for the dividend yield, as well as self-managed super funds interested in these areas. But this was a very crowded trade. The banks make up a huge part of a lot of Australians' portfolios. So they're probably not selling their whole holdings, but given that it's a large part of a lot of Australians' portfolios, they're probably just lightening the load in terms of the banks, in terms of the Telstra, in terms of things like Sydney airports, which really have been priced on the back of bond prices, and with bond prices falling and expectations around interest rates really moderating off here in Australia, that we'll see more rate cuts. I think these stocks, these trades just aren't going to be as popular as they were.
So where do you see people taking their money from? Like, if they're taking it from the crowded trade amongst the yield stocks, Julia, where do you think they'll be looking to deploy it?
Well, we've been talking about the resources for a while now. We've seen iron ore moving up in the right direction from April. We've seen oil prices moving up in the right direction as well. So we are seeing some buying and a little bit more interest in that material space as well as the energy space, which has been a space that a lot of investors have been avoiding. It is still a very volatile space, but the fact that we have seen most commodity prices, copper, iron ore, energy prices, all moving in the same direction means that there is a little bit more interest in that area of the market. So today, a pretty flat result. You know, we were down 0.2%, but on one hand we saw the banks falling, and on the other hand we saw the miners rising, and that's really what we've been seeing over the past couple of weeks. So we're seeing a recalibration towards the materials and the energy stocks and away from the banks.